for today's webinar. It is all about building your apartment syndication team. And we've got a couple of key items. For those of you who are joining for the first time today, the format of the webinar, I will probably speak for the next 20 minutes or so on building your apartment syndication team. And then I will save the remainder of time for any Q&A. Feel free to use the chat box. If you have a question, just put it in the chat box. I will periodically take a pause throughout this presentation and address any questions. So again, I want you all to get as much out of this as possible. So feel free to use that chat box, post a question in there, ask away. Happy to help address something very specific or even something very high level. So, ask any question you want. I'm going to go, like I said, for the next 20 minutes or so, and then we'll open it up to questions at the end, but feel free to ask as I go if something pops up into your brain and you just need it addressed. So with that being said, building your apartment syndication team, one of the most important things that we did at passiveinvesting.com to get our portfolio, I think we're up to nearly 600 million in multifamily assets. So to do that, we have to have an excellent team to build our reputation, build our brand, and make sure that we have, good relationships with all different parties involved. So step one in building your apartment syndication team, if you are an operator who is just a solo entrepreneur, you're really doing all of the roles and activities. You may need to continue doing all of those roles and activities by yourself. But step one, determine the essentials of your role. And what you need to do is if you're doing every activity, you need to figure out what you dislike doing or what you're not as good at, and find partners or find employees to help fill those voids. And so, one of the things as I think back on our team at passiveinvesting.com, I think back to when we first kind of formed our partnership between myself and Dan and Brandon. And the beautiful part, it was just kind of a natural progression where the three of us started out, we were doing everything, just the three of us when we first got started. And then we slowly brought on team members to help us as we grew and developed the company. But when we first got started, we realized that Brandon was really good at the due diligence aspect based on his background in insurance adjusting and construction. So he knew how to look at a property, and figure out if there was any defective or deferred maintenance items or if the property was in really good condition. And he really enjoys doing that. The other role that Brandon is really good at, and again enjoys in doing, is having that broker relations piece. They kind of fit together, right? If you're going to go out and look at a property, tour, or do due diligence, you're most likely going to interact with the broker. So it was a natural fit for Brandon to really lead our acquisitions team and do all of the due diligence, do all of the broker communications. If there's a new deal that gets released, Brandon's the first one to see it. And so that was a great fit because both Dan and I are, not as educated in the construction aspect or the insurance aspect as much as Brandon had in his, previous 10, 20 plus years of experience, combined experience there. So, we figured out early on that those activities were really good for Brandon to be focused on because he really enjoys doing them and he's great at it. The next area was the underwriting, the asset management, and really anything to do with the financials of new acquisitions or properties under contract or properties that we own. And that really fell into my wheelhouse because I enjoy working in spreadsheets, underwriting, looking for anomalies. I'm really good with numbers. And that was, again, my background experience. I worked as a financial consultant helping multi-billion dollar companies improve their cash flow and business operations. And so that's what I started to focus on. And within the company, I did, I really enjoyed doing that. And then on the back end of, once we look at a deal, once we have that relationship with the broker, we've underwritten the deal and we're ready to acquire the deal. Now we need that investor relations piece. And that's, again, a perfect fit where Dan came in. He really enjoys working with our investors, having those conversations. And again, another aspect of Dan's background was really on the marketing side of things. So he has run um, online companies where it has a lot to do with online marketing, using all of the technologies and the tools available in the marketplace. And that fell and fit right into his role in investor relations and marketing. And so that was just an essential step in getting started. And so you need to figure out, again, if you're a solo entrepreneur or solo operator investor and you're doing all of those activities, um, you can certainly do it and be successful. You may only be buying, one or two deals a year. And so, figure out first off what your goals are for the business. If you want to grow and be a really large company, you're going to have team members or partners that join you along the way. And so, establish those goals, know what you're looking for, but then start to figure out what you enjoy doing, what you're good at, and where partners or team members can fill in and get started and help you grow faster that way. So, as far as steps to outline strengths and weaknesses, I think part of it is going through the exercise. Like, I know I'm not as good with the technology aspect, whether it be software or the online kind of marketing or SEO optimization, managing email lists or managing online distribution, marketing tools, things of that nature. I'm not very skilled in that. I don't have a robust knowledge, but Dan is really strong in that category and he really enjoys doing it. And so that's a perfect fit for him. And I knew that was a weakness of mine. And so, again, I say when we first got started, it was just a natural fit where, um, Brandon had a different background, I had a different background, and Dan had a different background. And so, one of the things that constantly comes up that people say, I need to find a partner or I need to find a team member to help me. Um, Sometimes it's best to go outside of your network to find people or tap into a network where there's a lot of um different backgrounds together. And so what I mean by that is, let's rewind, 10 years ago and I'm working as a financial consultant for a consulting company. If I was to go to colleagues of mine in that space, I'm sure they would have been interested in multifamily investing. However, their skill set would have been very much the same as mine. And so while I could have partnered with someone with a similar background to me or work experience to me, and we could have been successful, it would have been very challenging because our skill sets and probably what we enjoy doing would have overlapped quite a bit. And so it would have left a pretty large void in some of the activities required when doing multifamily syndication. So don't always try to work with those that are similar experience or background, or even in your network. Try to tap into other folks outside of the network. For example, you know, going into the Multifamily Investor Nation group, there is a wide variety of people who have varying backgrounds of skills and experience, and that would be a great place to look for a partner or a team member, um, because there's such a difference in what everyone has done, and how they have come into this multifamily investing passion space. So just think through that. If you have been looking for a partner, but not finding someone with differing skill sets or different strengths and weaknesses, think about that. Think through it if you need to go into another network, to find where you are weak, to find a counterpart with those strengths. With that, I'm going to take a second here, to answer a question in here. Starting my syndication business has been very hard because there's so many pieces to the equation. So, what should the first steps be to start the syndication? And for those of you, if you joined a little bit late, use the chat box if you have any questions. Feel free to ask anything. I am here to help you as much as humanly possible. So ask away in the chat box and I will address those questions. So, Santos, good question. What is the first step in starting the syndication business? Well, you need to figure out, step one, what your goal is. So, if you want to be $1 billion syndication group with $1 billion under management or assets under management, um, you're going to have to think about building a team. And you also need to get some experience under your belt as well. So, step one, I would say, is establish what your goal is. If you want to buy a few deals or one or two deals a year and just bring in a small network of existing people that would be your investors, then I would just say get started and find a deal and put a deal together. Whether it's $1 million deal or a $10 million deal, you need to go out and just get started. So if if you have some background and experience in real estate and you could be buying, a $10 million deal or a $50 million deal, then you need to build out your systems and your team. So let me rephrase the answer so it's a little bit more clear. Um, if you have no experience in real estate and you've never syndicated a deal before, then step one to get started is you need to team up with someone who has been there, or you need to go out and buy a deal and figure out how to get it done. Like I said, it could be $100,000 2 unit duplex, and you need to go out, you need to buy a deal, you need to learn the ropes and gain that experience. And then you can start to move up into larger deals. I would say going larger faster is the best course of action. But again, if you have no experience, no background, you need to go out and get started. There's no reason you can't go buy $1 million deal today, and go through those steps, but you have to get that experience. On the other hand, if you've done several investment deals before, you've bought some smaller properties, maybe you've got a couple duplexes or a 10 unit property, utilize that experience and again, move into a larger acquisition. In thinking about what you have to do for syndication, you have to balance deal flow and investors. So, looking for deals that you can afford to buy. And so that's where you have to manage your investor side. If your investors can only fund, let's say, $200,000 towards your next purchase or your next syndication, then you should be looking for a deal that is about $1 million. And I say about a million because I'm thinking about 80% of the purchase price being debt, 20% being a down payment. So you're going to need about $200,000 to buy $1 million deal. And so if your investors, you feel confident, can do and fund 200K, on the deal flow side, you should be looking for deals that are 1 million or about $1 million in purchase price. That's going to allow you to look for and spend your time most effectively on deals that you can actually afford to buy. And this is a big issue. So if you're someone who has said, I've been looking at a bunch of different deals and there's no good deals out there, your deal flow criteria is, it needs to be improved. I did a previous webinar on the specifics of kind of criteria and deal flow, and I really go into detail about that. But the gist of it is, if your investors can only bring 200K and you can only afford to buy $1 million deal, you should not be looking at a deal that's 5 million. You should not be looking at a deal that's 10 million. You should not be looking at a deal that's 500,000. You should be looking for something that's about $1 million and really spending your time effectively underwriting and evaluating deals that you can actually afford to get into. So that's a big component there of really balancing those two things. So I hope, Santos, that helped answer your question about how to get started. And I kind of gave the example of if you have no experience at all or if you have some. But again, the gist of it is you're still going to have to do all those different activities. Justin, your question, where would be the best place to identify a senior deal sponsor and how do you identify them? I would have conversations with people. So if you are talking to potential investors, I would ask them if they have ever been a loan guarantor or loan sponsor. Um, if you are talking about the debt side of things, Justin, if you need someone to be a signer on the debt and bring their net worth and liquidity to qualify for a loan, I would talk to your investors. I would talk to people in the multifamily investor nation. I would talk to other real estate investors in your local community and get plugged into those folks. Just ask. It's not, it shouldn't be a hard question, or you might feel weird about it the first time, but as someone who is a loan guarantor and loan sponsor, it's a simple question. If were to ask someone, hey, have you ever been a guarantor for a multifamily loan before? They'll answer yes or no. And if they say yes, then ask some more questions about it. But you just got to go out and ask the people. So again, ask your investors, ask people in the multifamily investor nation, and then check in with your local community of real estate investors, and you'll probably find folks there. Where can you find the network to build a team? Mark, you got to get plugged into the multifamily investor nation. So network in there. Also, network with your local real estate investor community. So you just got to go out and ask the questions, talk to people, and really start talking about real estate a lot more, and you'll find those people out there. All right, very good. Let's see. Did I have another question come in? Um, Chelsea, which comes first, investors or finding the property? It's a balance of both, but the the old kind of saying is if you have a good deal, you'll find investors. And I think you need to kind of balance the two. So um and you can do these tasks simultaneously as well. One day or in the morning you could be looking and evaluating deals, and in the afternoon having investor calls. So um, I would have a ballpark idea of how much money you think your investor network could bring in. So again, let's go back to the example of if you think your investor network can bring in 200,000 and you feel pretty confident about that, then go out and find $1 million deal, and then go to your investors and start to get funding from them to close that deal. So it's a balance of both. You have to do both of them together, which is why if you're a solo investor entrepreneur, you got to wear all those hats, and you have to find the time in the day to do all of those activities. Versus if you're able to partner with someone, one could be looking for deals, the other could be having those investor phone calls. Let's see here. I'm going to run through. Let me see. We talked about strengths and weaknesses. We talked about looking in your network to find those spots. How often should you be evaluating your weak spots constantly? So figuring out, if you're getting started and you're doing every activity, whether you like and enjoy each activity or not, you have to do them. But making a conscious effort to think through what you are not good at or dislike doing, put that on a list, and always evaluate and add to that list. And hopefully, as you grow your team, you can offload those activities that you are weak at or you don't enjoy doing, because someone else out there will probably have a passion for doing those things. And finding that. So constantly evaluate what you are weak at or where gaps are for your team. With that being said, I have wrapped up. So feel free to ask all of the questions that you have. I really want this to be as helpful specifically to you as I can. So let me jump back to the chat box and go through some of these questions. How often do you include institutional investors? Which investors do you prefer more, normal or institution? And what is your typical strategy to find institutional investors? Um, we don't work with institutional investors. So that is a fairly straightforward answer to the rest of those. We prefer working with everyday individual people just like you and me. And the reason we haven't really gone down the path of getting institutional investors, and kind of one of the benefits that we had going through 2020 with COVID, we saw several deals fall apart at the closing table when COVID broke, and an institutional investor was bringing a large equity check towards that deal for closing, and they backed out at the last minute. If we have a single investor back out, we can replace them fairly quickly with another kind of everyday individual investor. So if a $50,000 person backs out at the last minute, we can find someone else to fill their spot. Versus if an institutional investor was bringing a $5 million check to the table, it would be a lot more work, a lot harder to fill that spot. if they backed out at the last minute. And so that's really why we have not gone to that institutional investor route. There's a lot of groups that do it and a lot of them that are successful. It's just figuring out what you are. What you're good at doing and where your relationships are. So I don't think it's a bad idea if you have a relationship and feel strongly and confidently that this institutional investor can deliver for you on a deal and they have a really good track record, then there's no reason not to work with them. Our preference is just working with the everyday people. Again, we have a passion, and really the reason we started passiveinvesting.com was to provide everyday investors the opportunity to invest in these phenomenal institutional quality assets that we buy, that everyday people don't normally get the chance to do. And so that's why our passion is really helping the everyday person do that. Go to my next question here. What is the general rule of thumb for how long you would need to have a lasting relationship with an investor prior to introducing them to a deal? Consult an SEC attorney for that relationship threshold test. But the high level kind of rule of thumb is that you should know the person and have had a conversation with them before sending them the deal. So, you know, an investor is likely not going to invest with you unless they know you, they like you, and they trust you. And having a 10-minute phone call with someone personally, I don't feel like I would know them that well. I would want to build that relationship over time. So, um, you know, I would say build that relationship, build that trust, have them know you, have them trust you, and you'll eventually turn them into an investor. But it is the other side of that rule is it is not okay to email a deal out to people you have not had a conversation with. So if you attend an event and you get a bunch of email lists, you should not be emailing out a deal to people you've never talked to on the phone. So that would be a good rule of thumb of what not to do. And then always, have conversations with people, build that relationship prior to um, offering them an opportunity to invest in a deal. Please share some thoughts around splitting the equity among co-sponsors with varying roles and responsibilities. Well, the beautiful part about investing in real estate is that you can do things on a deal by deal basis, right? Each deal is going to have its own LLC and ownership structure. And so if let's just say it's you and two partners working on the deal, and you all three are going to do the same level of work and oversight, and you all have you're all kind of getting started from the same place, then I would think you would probably just split the equity equally. Let's say, you know, one person out of the three has 10 years of investing experience. They've put together 100 real estate deals, and the two other people have no experience at all. I would think the person with all that experience would probably get a little bit more ownership. But again, the beautiful thing is you can set up one deal, see how it goes, and then change and do the equity splits a little bit differently on the next deal. And so it's a good way to get started. And not feel like you're blocked in to having one equity structure for every single deal going forward. So have a conversation about it. There's There's some other good information. I know we've done a webinar talking about like the roles and the equity and all of that. So that'll get you a little bit more detail there, but have a conversation with your partners, with your investors, and really think through it thoughtfully and make sure that everyone's happy going into it. And always check in, quarterly or semi-annually on how everyone's feeling about what's going on and how the roles and responsibilities are breaking down. How do you approach massive and different types of information about apartment syndication, such as underwriting, raising money, looking for deals, and so on? Santos, I would say think about what information you need and then go and find a source that is credible and reliable to get that. So, you know, multifamily investor nation is a great place for it. If you in a week are having trouble with some sort of underwriting issue, go watch the previous, I think, 4 or 5 underwriting videos that we have and get the specific thing that you are looking for regarding underwriting. If you need to get some information about raising money, go check out the raising money stuff. So the way you need to think about it is what do you need right now? And then go and seek that information out. Next question in here. What are your thoughts on the many syndicators advertising the deal on Facebook? It depends what type of deal is being advertised. So a 506c like Charlie can be publicly advertised to accredited investors only. So it's certainly a source. I would just say it's probably really difficult to put an ad on Facebook and actually get a person to write a $50 or $100,000 check to invest with you if they don't know you, if they don't trust you, and if they don't like you yet. So I think if you're just getting started, spend time building personal relationships with people. You'll be much more successful than thinking you're going to put a post on Facebook and get a bunch of investors from that. It's not likely. Will there be a replay of this? Of course. Melissa will get the video up on the Multifamily Investor Nation platform, also on YouTube. So you'll be able to rewatch that at any point in time. That being said, I've got one more question in here. If anyone else has another question, please ask it now. Otherwise, we're going to wrap up after this question. So, where can we go to find a form with all the investor job duties on a team, or how should we go about starting our own list of duties and responsibilities of each of the GP members? So investors, if they are truly limited partners, they have no responsibilities related to putting the deal together or overseeing the asset. So from a GP perspective, I believe we have some sort of template in the Multifamily Investor Nation. Otherwise, I would just, kind of poll some people of how they've structured their specific deals. And people are happy to share kind of what the allocation of the GP duties are and what sort of percentage allocation should go towards that activity. With that being said, thank you everyone for joining. I don't see any more questions in here. Any other questions in here? If you have a last minute question, post it in the chat box or in the Q&A box. The next summit coming up next week, Tuesday, 11 a.m. Eastern, is going to be July 27th, and it's going to be breaking down the real estate syndication structures. So a lot of questions coming in here at the last minute about equity splits. Check this out. Next week is going to be the answer to all those questions. So tune in next week. Talk about structuring syndications, waterfalls and hurdles, equity splits, the promote fees, and the guarantee or the general partner fees as well. So it's going to be a very robust section, probably answer a lot of those questions. The link to sign up for next week's webinar is in the chat box. So feel free to do that. Thank you everyone for joining. I hope you have a great rest of your morning, your afternoon, or your evening, depending on where you're joining us from. And we will see you next week, July 27th, 11 a.m. Eastern, breaking down the syndication structures. That is the topic for next week. So we will see you then. Have a great day.